Hello, everyone. Welcome back to another episode of 401 Access Denied. I'm your host for today, Joseph Carson. I'm the Chief Security Scientist and Advisory CISO at Thycotic. It's a pleasure to be here with you today. And we've got another important topic which many organizations really need to consider and look at the current strategy and current plans that they have for cyber insurance. So today I've got joined with me is Ann and Kevin. So Ann, let's start with yourself, and if you can give us a little introduction about what you do and what's the offerings and what your organization does.
Sure. I'm Ann Irvine. I'm Chief Data Scientist at Resilience Insurance. So we are a what's called an MGA. We're sort of most of the function of an insurance carrier. We sell cyber insurance policies to our policyholders. We do all of the underwriting, the pricing, the claims handling, the sort of servicing during the policy period, everything except hold the actual risk, the financial risk. So we partner with insurance carriers to hold the risk. So as Chief Data Scientist, I work on modeling cyber risk, really helping our underwriters evaluate the security of companies that have applied for our insurance policies, and also help our security team sort of think about how to service customers once they've bought a policy.
Awesome. And Kevin?
Yeah, thanks. I'm Kevin McGowan. I'm a vice president on our underwriting team. I sit in Chicago. I help lead our strategy on the underwriting side, work very closely with Ann and her team, as well as our security team. And really I'm an insurance industry veteran. So came over here to Resilience, which Ann said we are an MGA and a bit different than a traditional insurance company. And so working together with data science and security, and then with insurance folks like myself to bring together a holistic, insurance plus security offering for the cyber market.
Awesome. So, I've been, for many years, I've been, kind of more from my side as just looking the outside inwards into this insurance industry. And I've seen it from the days where, I think it was Target had a cyber captive, and we all looked at how the cyber captives work and how it was able to, provide some financial support. Because I think at the time, 5-6 years ago, even a bit longer, there wasn't a lot of, it was all, let's say, on tangible assets. It was the cost of the hardware, but not so much the data. And then data got a lot more valuable, and the actual tangible cost of data became much more visible. So cyber insurance, of course, had to evolve over the years. And I think even I worked quite a bit in the maritime, where it was actually covered. It was actually the insurance for cyber attacks was actually under the terrorism part of the insurance. So for a lot of the maritime side, they weren't even covered if they became a victim of a cyber attack, because it was considered terrorism. So one of the things that, how have we evolved today? What's the current state of the cyber insurance industry, especially now considering that data is becoming an important aspect of the value of organizations? So kind of what's the current stance, and is more organizations choosing the cyber insurance path today? I think I'll pass that one to Kevin or Ann.
Take a crack at that one. Okay. Sure. So the state of the cyber insurance market is a bit in flux right now, to be candid. I will say it has come a really long way over the past really decade. So cyber insurance, as you alluded to, it's been around in some way, shape, or form for 20 years or so, really more around in earnest in the last 10, with a lot of true purchasing and take up of standalone cyber insurance for organizations of all sizes. So as you mentioned, data became more valuable and a much bigger part of a company's balance sheet in a way. And companies realized there was a need for this type of insurance. And so over a long set of years, the product evolved. And initially, you had coverage for essentially business interruption, meaning you relied on your website and it got hit with a DDoS attack. Website went down, you couldn't do business. Maybe there was a loss there. It didn't happen a lot, but that was the idea. Then you evolved into what cyber insurance for a long time was most well known for and associated with, which was data breaches. You mentioned Target earlier. So think back to 2013, 2014, big retailers like Target and Home Depot and some others had widely known, very public, large data breaches. And so cyber insurance was responding to that and a variety of costs associated with that from both a first and third party perspective. And then, of course, fast forwarding to today, I'm surprised it took us more than 30 seconds to mention ransomware, which is really the topic of the day in the cyber insurance market. In short, cyber insurance does cover many costs associated with ransomware. And as you can imagine, that is really the biggest concern for insurers right now. And I mentioned the market being in flux. And by that, I mean, in insurance lingo, the cyber insurance market is very hard right now, meaning rates continue to go up significantly. Coverage is being pulled back in certain areas. So there is a lot of volatility right now because insurers are taking significant losses associated with ransomware. So at a high level, that's a primer, I would say, on the current state of affairs.
Okay, yeah, we have seen in the past year ransomware evolve significantly, where it's more of a service, and you've got organized crime, which actually made businesses out of it. They consider it as a entrepreneurial business, and it no longer is just about disrupting the service, but it's also about data exfiltration, where it's actually taking the data out, threatening to disclose it, and hitting service providers, which ends up, it's not just one company. You end up with many companies all of a sudden. You look at the recent Kaseya, you had 1,000 companies all of a sudden just become a victim of ransomware, not just one. So then I guess that accelerates the claims for multiple companies, and they all have to take it on their own decision, rather they decide to deal with it and so forth. I guess that's having a major impact on the industry when you've got those types of let's say, supply chain significant impacts, correct?
Yeah, the week after July 4th, a few weeks ago was pretty rough on a lot of insurance carriers. Most of the companies that were hit were relatively small, small businesses, but a lot of them did have cyber policies, and there were a lot of claims, a lot of activity in the market for sure.
Yeah, and it went in combination. It wasn't just we had so much at the same time. Not only did we have the influx of major supply chain and ransomware cases, but we also had to deal with Print Nightmare, which opened the doors to many organizations to allow attackers in to deploy ransomware. So there was many things that all of a sudden was just a domino effect that really attackers were waiting for that door to be opened. This major vulnerability comes out. They have that door, and now they can gain access easily and deploy malicious ransomware. So, Anne, I've got a question for you in regards to what your role is and data analysts, and you mentioned earlier risk. I have a question. I mean, this is something we've been doing in the industry for a long time, is trying to determine the risk side of things, because unfortunately in security, sometimes we find it very difficult to measure risk and analyze risk. So I'm just kind of curious into, is the insurance industry, you're actually bringing new ideas or new ways of trying to measure risk into the industry? Because it's definitely something we need to improve on to understand about what is the risk and how do we minimize that, and ultimately what coverage do we need. So can you give us a little bit kind of some of the methodologies and approaches there?
Yeah, so first, I'll sort of at a high level, what I love about working in the insurance business, and I can say I'm not sure I fully expected this when I joined the company 3 years ago, but I really think it's sort of played out to be true, is that our incentives to truly sort of in an unbiased way, in a very scientific way, understand and measure risk correctly and accurately are very much there in a way that they're, I previously I was working at a cybersecurity product company, and we sort of wanted everyone to we sort of wanted to exaggerate the risks that, we claimed we were solving for. And it's very hard to, in the sort of wild cybersecurity product marketplace that's out there these days, it's very hard to know what solutions are solving what problems and how big are those problems, and how do we hold these vendors accountable for the things that they say they're fixing or preventing from happening. It's just very hard to quantitatively understand risk in that context. So what I love about insurance, sort of the space that we're working in, is our incentives are to sort of be rigorous and take, genuinely the most unbiased sort of perspective on measuring organizational risk and help companies to understand their own risk and help them to, improve their security posture in the most cost-effective way. So the sort of business level incentives that we have to do good data science, I just love. I think that's sort of rare to find as a data scientist, to feel like the sort of business motivations behind the work are true and genuine, and really trying to solve a problem in the best way possible. So I like working in this space. What do the methods look like? They look pretty different from standard insurance actuarial science. So in other lines of business, of course, the threat landscape changes much more slowly. So I think, property insuring actuaries would say that, the sort of landscape of floods and hurricanes and so forth is changing. There's climate change and those risks are changing a little bit over time, but it's nothing like the speed of change that we're seeing in the cybersecurity space. So, and it's a relatively new line of business. We have, there's just less of a history of incidents to learn from sort of an actuarial perspective. So the methods, necessarily are a little bit different. And I think look more like sort of data science and sort of exploratory data analysis, sort of cybersecurity first. We use a lot of sort of security experts to drive the way we think about our models, more so than traditional actuarial modeling, just because the actuarial data is not there in this market. So we sort of take a sort of domain expert driven modeling approach, which allows us to keep in mind how the threat landscape is really changing really rapidly, and allows us to incorporate the sort of latest understanding of what threats are where and how frequent they are and how severe they are.
Yeah, I think it's a good point, because one of the things I think on recent years, it's become much, I think, looking at trends in historical data, a lot of the problems were most organizations didn't want it to be public. They swept it under the door and we didn't hear about it. And probably for many data breaches over the years, we probably still haven't heard of, half of them. And I think really where regulations and governments are now forcing them to disclose at least the victims, because it's not just the organizations with its victims, but it's also their customers and partners and employees that are also victims. So it's all part of that transparency side. And I think hopefully that is providing much more information into the insurance industry. You get some more visibility, more data that you can actually do those analytics and understand about what's the threats. And one of the things, I look at a lot of different reports that tries to do that, such as the Verizon Data Breach Investigations report or the Cunningham report, to really understand about what is the trends, what's the threats, what's the impact, and then try to do it that way. So just kind of get an idea. Let's say I'm a company coming to you and trying to understand about, what types of questionnaires or conversations would we have in order for you to identify, the risks? And let's say if you were to do an underwriting or a policy for me, what types of things would you be looking for? What types of questions would you be asking me?
You want to start that one, Kevin?
Yeah, sure. It's a good question, and it's it's a process that has evolved a lot over time. And really, the function of Ann and her team for us at Resilience are an example of how it's evolved. Because if you're a middle market size company, so a fairly large organization, potentially seeking cyber insurance, as you said, so you'd have a conversation with your insurance broker, talk about the risks, determine what type of cover you may need, and then the broker and yourself together would go out to the markets, of which Resilience is one, and seek options, quotes for cyber insurance. And historically, you might fill out a couple fairly simple, true, just paper insurance applications with questions, starting at a high level, saying, okay, what is your business? What do you do? What are your operations? How large are you from a revenue standpoint? And then you might get into some questions around basic security hygiene. And then lastly, perhaps a section around, well, have you had any cyber insurance claims or losses previously? And that was about it. Today, that process still exists. Now, with the market hardening, as I mentioned, as a result of losses, as you can imagine, insurers are pretty desperately seeking more information, more data, to try and come up with
Mm-hmm.
the right answers, the right rates. And if you think about everything Ann described that she's working on and trying to pull in more data to the process. And so now there are applications, as I mentioned, but they have evolved a lot
Mm-hmm.
in terms of the scope, the detail, the questions being asked. Right now, in particular, there are a lot of additional specific supplemental applications tailored specifically to ransomware, and they're following MITRE attack
Mm-hmm.
framework, and they're following kill chains in terms of the questions that are being asked. So there's a lot more security influence now. And then, especially at a place like Resilience, you're going to partner with a data science team, a security team, to collect
Mm-hmm.
additional data from a variety of sources. And then lastly, I would add, sometimes with you as the prospective insured organization, you're often going to now get follow-up questions. And so we often are having
Mm-hmm.
underwriting meetings and or calls with several underwriters like myself on the line to ask a variety of questions and have a bit more of a true conversation, because it's interesting, the whole art versus science concept, and the reality
Mm-hmm.
on the underwriting side is it's a blend of both. And so we're trying to get as much detail as we can, but if you think about it, the more we can truly interact, have a discussion, you can start to pick up on some of the qualitative items too, like culture of risk management
Mm-hmm.
at the organization. How overall committed to security are they? What does that dialogue look like? And then the last piece I'd
Mm-hmm.
add is just, I think insurers right now are also taking a view on, does the organization that's seeking insurance, do they want to partner with their insurer? Because now you're seeing with cyber insurance in particular, there's a lot more being offered and that needs to be offered beyond just the financial transaction of, here's the risk transfer of, if something bad happens, you'll get a
Mm-hmm.
check. And so trying to seek out that partnership, I would say, is kind of the last part of the process right now.
Mm-hmm. So it sounds like there's a lot of people involved. So two questions I've got related to this. I mean, what size is the team that needs to support such a, from one is, from, the underwriting to the security team, to even legal side of things to, and how do you make sure, it sounds also that it's a, not a one size fits all. It sounds that almost every single one is almost unique and custom. So how big is the team that in the background that does all of this? And the second part is that, can you get to a point where it's a one package for different kind of organizations versus having it such a potentially every organization is unique? You end up with big inconsistencies, I guess.
Yeah, so that is definitely one challenge. We have just, Resilience is a relatively small MGA, and we have 12 or 15 underwriters, something like that now, Kevin. So one challenge is certainly, making sure that we sort of keep our standards and approach consistent across this relatively large underwriting team, really a sales team. And that's truly where my team comes in, and trying to standardize a lot of the information that they have access to. So we collect a bunch of security data, again, sort of driven by our security experts who tell us what's important and how to think about that data. We try to present it to underwriters through a sort of single pane of glass, so that they're all sort of starting their investigations from the same place. So we present as much of that information in a sort of consolidated view. We provide them with actually some language that they can use in some of these conversations with customers, just to sort of streamline their efforts a little more. We try to do as much of the science part of underwriting in an automated fashion, and keep that part of it consistent. But there's absolutely sort of an art in using that and interacting with customers on top of that. But I know, the underwriting team, at least at Resilience, is in constant conversation, and, they meet all of the time and review each other's accounts and, talk about how they're approaching different things, and keep my team posted on, what would be helpful to, streamline their efforts and make them more efficient as well.
Is that also kind of considering things like automation, a lot of it where possible, because that's the one thing, and that's what I do in my job, is that we want to spend the time doing the things we enjoy doing, and the things we don't enjoy doing, we'll look at, well, how can I automate that? How can I put it in a script, make it more predictable?
Yeah,
is that
and
something?
totally. And this is a sort of a funny, I think there's a lot of fear out there in the world at large that AI and data science and all of these things are going to replace humans, lots of human jobs. And that's certainly true for a lot of jobs that are fully automatable. I don't think underwriting in the market where we are underwriting, which are fairly large companies, we don't want to fully automate that. These companies are complex. They have their own sort of specific issues. Like Kevin said, there's sort of a lot of qualitative culture considerations that truly only a human can really evaluate at this point. So we're trying to take that automation as far as we can, and then save the very valuable human underwriting time for focusing on the human elements that are can't be automated.
Yeah. No, I agree. When we talk about a lot about AI, and really what I look at as AI is all about advanced automation. It's about doing things much more with multiple sources, much more advanced, and absolutely a lot of jobs will be automated. It just means that we have to get into reality. It's about allowing us to do the more things we enjoy doing. You automate as much of the mundane tasks as possible. And that gets me one of the next areas that I'm interested in, is that I do a lot of incident response and digital forensics. And every time I go into a incident, you're looking either at a security incident, you've got unauthorized access, you either have something like a service availability scenario, or you've got basically confidentially exposed where data has been stolen. And not all incidents are equal. So how do you deal with the many different types of cyber incidents and the variations that's out there? Because sometimes you're dealing with nation states, sometimes you're dealing with criminal organized crime, sometimes you're dealing with a script kiddie, and not all incidents are equal. From you get a unauthorized access to a ransomware case. Ransomware, of course, can take multiple aspects of those. It's unauthorized access, it's data loss, it's basically service down. So you might have multiple components to deal with. How do you deal with, from an insurance perspective, all those many different? In the security world, there's so many. There's cloud, there's on-premise, there's multinational, there's different types of data, different types of regulation. So how do you deal with all of those different types of incidents, and what would be the rest, the way to do underwriting for those?
So I'll take that first, and Kevin probably has thoughts to add as well. But from my perspective, what I want out of us handling those incidents is to, treat them as data points that we can use to learn from and improve our models moving forward. And as I said before, the landscape of cybersecurity and these types of incidents is changing very quickly. So the analytic models that we're using are pretty expert driven. It's not the case that we have some fully supervised training data set where, we have things labeled as like 1 and 0, and we're predicting this happened or this didn't happen based on a simple, a simple feature set. Like, it's not a clean sort of classification or prediction problem by any extent. So things are changing quickly over time. And like you said, the types of incidents that we see are just very, very different. So, we have categorized these things into some common, sort of the most common types of attacks. We do attempt to bucket them and then, predict the probability of those sort of higher level types of incidents occurring. But, one, resilience is fairly new. We've just started to collect our own claims, and this is sort of an ongoing conversation. What is the data that we want to collect and have available, sort of in a structured way for us to learn from a modeling perspective moving forward? And I like your description, because my line that I'm always sort of pitching over to our claims team is, structured data is great, whatever you can categorize and label in terms of attack vector and type of incident is great, but I also want a few paragraphs that just describe what happened in as much detail as you have access to, because I don't know yet what the sort of what all of those features are that I want to learn from moving forward. And things are changing quickly, and I want to make sure we have that full description. I don't think we're in a place right now where we can sort of fully structure and fully categorize these incidents. So, we're still sort of treating our modeling as we said art versus science earlier from an underwriting perspective, but also from a modeling perspective. It's very much an art right now, as much as it is a science.
Absolutely.
Yeah, I think this is really useful.
Kevin, did you want to add something? Sorry.
Yes, I was going to say this is a really useful topic. And Ann just mentioned wanting that paragraph of information, right, which isn't necessarily as easy to structure and analyze. But it's a good point, because I can say on the underwriting side, you talked about all the different types of losses and threats and risks that are out there. And right now there are more of them in simple terms, and insurers are having more losses. And so every day underwriters are looking at opportunities, and more of them are coming off of a recent loss. And for that underwriter, whether or not they were involved with the prior loss, they're trying to learn, they're trying to ask questions and get as much of a narrative as possible, which is going to be in long form, whether written or shared verbally, meaning, okay, you had an incident, ransomware or otherwise. How did this occur? What was the initial threat vector? Was it a phishing email? Was it, open RDP? Was it lack of multi-factor authentication? Trying to understand that narrative, trying to understand certainly the financial impact. And then the last piece of, okay, well, now what are you doing differently? What security measures have you implemented or rolled out to prevent that from happening again? That's a fairly basic concept from an underwriting standpoint, but that is a lot of what's happening right now. And, I think the other thing I would add is, in your description, Joe, you talked about the different components of loss associated with unauthorized access or ransomware. And I think, if nothing else, while it's been a bit of a struggle in the last year or two for insurers, it's actually a testament to the efficacy and the value of the product, that being cyber insurance, and the way it's evolved, because that scenario you described of the different components of loss, there are parts of an insurance policy that are all being hit. So the policy is and was well designed, meaning you have your upfront investigation costs. Okay, we have to bring in a law firm, we have to bring in a forensics firm. You mentioned DFIR. Then there might be a ransom payment, there might be regulatory inquiries, there might be downtime, business interruption, there might be an actual ransom payment, and all those different things that I just described and more generally comprise different parts of a cyber insurance policy. And so I think, taking it forward, what the market and what carriers are trying to figure out is exactly what we've been talking about. So how do we model those perils and those threats, and how do we ask the right questions to best determine and predict, thinking about it from a data science perspective, and predict, okay, this company does not have, security control X, and that makes them, this percent more likely to have this type of loss. Because again, as they're currently constituted, for better or worse, the insurance policies are quite broad in nature, in terms of, they're not necessarily specifying, we'll cover this type of hack or this type of loss, but not the other one. The triggers that are there are fairly all encompassing when it comes to security breaches and data breaches.
Yeah, I think when I think about it, I always look for kind of a comparison, when I look at things and try to understand. And sometimes I use the metaphors. And when I think about, when you look at just even simple car insurance, when an accident or a claim happens, it's very specific. Either the driver drove into something, or the car was parked and somebody hit them, or, that all of a sudden there was this mystical scratch or dent that appeared, or that it was broken into and something was taken out of it. It's always very specific. When we look at cyber side of things, when an incident happens, it's almost everything. It's like, all of those different options all hit at once. And I go through, I'll just give you some of the things that goes through my mind when I get, involved into an incident itself. So, when I think about, going in and you're already dealing with an active security incident, the things that goes through my mind is, did they have access to what domain controllers, or did they have access to what accounts? what systems does that mean that they have access to? You get into what type of data does that now mean they have access to these different systems? What data, what applications are running in those machines? Is it proprietary? Is there source code? You get into, is it personal information? Then you get into, was it on premise? Was it the company's own systems, or was it the cloud environment? Then you think about, well, how long has this been going on for? Has it been going on for a month? Is it, a day? Is it 3 months? And a lot of cases, what you end up finding is that the access has been there for like maybe 8 months or more, but the actually active hands-on keyboard attack has only been maybe 4 weeks or 6 weeks old. So you get these different, and it might even be multiple actors you're dealing with. You end up looking into what types of tools and techniques did they use. You're looking, have they left backdoors so they can return or sell it off to other criminals to come back later? Then you think about, well, have they stolen data? You start looking at your internet bandwidth and saying that all of a sudden you have a massive spike in data that exited the organization. And unfortunately, sometimes organizations are only looking at data coming in, not necessarily data going out. And this becomes a challenge. Then you don't know what data, because they're doing maybe deep packet inspection coming in, so they have a better understanding of what data has been downloaded, but very little information other than the size of data that's going out. Then you think about the entire timelines, because a lot of the attacks, they clean up their evidence. They clear the logs, and you end up with very little information to go by. And sometimes even I've went to the point where I'm looking at this server had the event logs cleared at this time, and this other server had the event logs cleared about 2 minutes earlier, and this other server had it maybe a few minutes earlier. And then you start looking, and you're looking for breadcrumbs that allows you to put it's like a jigsaw puzzle. You're putting the different pieces together to try and find out how they relate, and then also what evidence is remaining. So all of those gets me into, since you end up, it's not just dealing with this very specific cyber attacks, usually, involve many techniques, and also gets into then who's accountable. How do you get into the accountability side? Because if you go back to my metaphor, you'll either have it's the driver or the third party driver, or you'll have somebody who, broke in, and you'll have a specific accountability. Did they park in the right place? Were they parked somewhere legally? In cyber, there's so many software, there's so many solutions, there's so many components being used. How do you get down to also accountability? How do you, find out, they might be using 10 different vendors, and one vendor was maybe used in order to gain access. Another vendor was used in order to move laterally. Another vendor was used in order to take the data out. So, for me, it's what instance, from traditional insurance is very complex. So how do you take all those factors into play?
Yeah. So I'll speak to sort of the first half of your comments first, and then maybe get to the accountability part. So there is certainly a lot going on from a forensics perspective when we, investigate these incidents. I think, coming back to the question of underwriting and how do we model and predict, for a new organization, is an attack going to happen, and how much is it going to cost is really what we care about. And honestly, that's what companies care about too, right? We're talking about risk management here, and that's what they want to know too. How much insurance do I need to buy? What, if I implement this security control, sort of how much will my risk go down? So, questions like, how many minutes between, how many minutes between exfiltrating data and sort of deleting the logs passed, during this attack. Like that data point is probably not relevant for predicting for a new organization. Is this going to happen or not? And I think the corollary to the car accident is there's actually a lot going on with investigating a car accident, right? Like you can think about the city that it occurred in, or maybe the more specific in the U.S., the more specific zip code, or maybe we should talk about, particular street address. We can think about what minute it happened, what cycle of the traffic light, the person was moving through the intersection, if they were going east or west, or, there are all of these things happening in a car accident as well that might be considered as part of that investigatory process for, to your point, deciding blame. But for the purposes of predicting a car accident for another driver in the future, whether or not the person in this past accident was driving east or west, or what cycle of the light they were sort of passing through the intersection, that's probably not relevant. What's relevant is their driving history, and maybe their age and the type of car they're driving and the zip code where they live, or things like this. But the details about the sort of investigation of that accident are not necessarily applicable to the sort of future auto underwriting. And I think again, the same is true for cyber insurance. I think what's less obvious in the cyber case is what the corollaries are between the driver's age and the car they're driving and the zip code where they live, and whatever else is used in car insurance underwriting. Those other factors. Zip code might not actually be legal to use. I'm not sure. But what are those same things that are predictive of future losses that we can take away from incidents and sort of reliably use to predict future losses? And I think we haven't totally figured that out. I think one thing that I'm passionate about figuring out is figuring out what cybersecurity solutions a company had employed and how they were being used, and then figuring out, again, coming back to what I said earlier, holding those cyber vendors accountable. And if you're using this firewall, is it actually protecting you or not? Versus another similar company down the road that's using a different firewall vendor or none at all, or whatever it is.
Is it configured correctly as well?
Exactly. Which is complicating for sure. So I think I think the analogy is maybe actually there and sort of strong. Comparing the sort of auto crash with the cyber incident. Of course, there are a lot more car accidents in the world every day than there are cyber incidents. There are more people driving than there are organizations. So it's easier to learn from that data at a large scale. But again, the trick is really, I think, just figuring out what the nuggets of information are that we should be learning from these cyber incidents. But we don't know what those are yet, which is why I like those multi-paragraph descriptions of what happened, in as much detail as possible. In terms of accountability and sort of placing blame, as Kevin said earlier, my understanding of most of the policies that are on the market today is that fault is not really a consideration when we're deciding whether to pay a claim or not. So, if the firewall is not configured correctly and there's an intrusion and a loss, then, that's covered. If an employee reuses their password in a completely irresponsible way and some threat actor is able to get into the system and steal some data, that's covered. Human error as well as sort of malicious nation state activity is all sort of covered across the spectrum. But Kevin, please correct me if that's not completely true.
That's spot on, and it speaks to, as you said, what we were discussing before in terms of the policies are broad in nature. There are many reasons for it. One of them, from an insurance perspective, has to do with the fact that cyber insurance as a product spawned out of professional liability insurance. So just think essentially malpractice, but for companies of any type of service, including technology companies. And so the idea was some sort of error or negligence led to a security event. And so now you might still have that. You can have human error, as Ann alluded to, but then in today's world, we also see lots of malicious activity, by hackers or state-sponsored attacks, whatever the case may be. And they're all covered. I think the two pieces that are relevant in terms of essentially attribution from an insurance perspective in the cyber landscape, one is, you mentioned service providers, and underwriters do try to look at vendor risk management because it does broaden the attack surface, right? As you said, you've got 10 different IT vendors and they've got varying levels of network access. And are you the insured organization? Are you auditing the security of, your third party service providers? And the bottom line is, if the insured organization has an event, and even if it was the initial fault of a service provider, it's generally expected to be covered. Now on the back end, the insurer may get involved in subrogation and or look at contractual provisions between the insured organization and perhaps that IT service provider that may have been at fault. And so there could be some recovery there on the back end after the initial loss. But up front, the insurance policy generally is designed to respond, even if the fault was of a third party provider. And so that, as you can imagine, does add an element to the underwriting process. And then just the other piece of it that I think is very relevant in today's market, which gets talked about more and more, is attribution when we're looking at some of these true headline events and the different concerns of, well, who was behind this, or who at least allowed this to happen, and how can we stop that, via sanctions or otherwise. And so now I think there are more calls for essentially, public-private partnerships and more government involvement to try and work on that attribution and actually bring consequences for the benefit of all these organizations that are being hit. So I think there's more being done there. I mean, you can attest to, what does the DFIR look like? How much can you learn? IP addresses, et cetera, who really did this? Because oftentimes it isn't known. And so I think that's an area that is being worked on at a lot of levels, far beyond just insurance, which could have a lasting impact.
Yeah. I was just thought came to mind is, if you start looking at, some places where, let's say, countries which are holding, safe havens for cyber, criminal gangs, and if you do find attribution coming from those countries, could potentially, governments hold those countries financially to pay, the insurance claims that comes through this. Is that something that might be, a consideration for the future? Because ultimately, if it needs to find ultimately a source of where the the insurance comes from, who pays? Is that something that maybe the governments are looking into from a regulatory standpoint? Is that if a country if you have a cyber attack and it's major, such as we had recently, and you do find attribution to a particular country, for the government to hold that country accountable financially and maybe force them to pay the insurance or pay the claims. Is that something that might happen in the future? That might even consider those nation states to no longer provide safe havens if they become financially accountable.
Yeah, I think it's an excellent question, and I think there's a lot of conversations happening at a lot of different levels right now that are headed at least that direction, because you see a lot of chatter now. Different government officials, different regulators will say, well, perhaps the answer is just banning payments of ransomware entirely. But then there's plenty of debate to that about, well, is that actually effective? And then, what is a company supposed to do when there's no other option? And then, I mentioned before, do governments need to get more involved and take more aggressive action, sanctions, financial, whatever the case may be? And I think there has been talks, in Washington involving large insurance companies about, well, should there be, you mentioned terrorism insurance earlier, and there's a federal backstop for that. Do we need some sort of federal backstop for large scale systemic aggregation events that everyone is worried about, which we maybe haven't quite seen yet? But if something like that were to be created, to your point, would that perhaps cause the government, federal or otherwise, to maybe take more action to hold these countries, if they are involved, financially responsible? Because right now, today, I don't think that's necessarily going to happen. I don't think the chain of events is quite there where the government is going to identify a country and then eventually come downstream and reimburse insurers. But this has become such a high profile item, and it is on their radar. And again, if something like a federal backstop does get involved, I could certainly see things getting to that level.
Yeah.
Yeah.
Go ahead. Go ahead.
I think most of the regulation talk is more at a high level of holding entire organizations or countries accountable for the practice at large, and instituting sort of sanctions at large. I think the idea of holding governments accountable for specific incidents, this cost company X $2.5 million, now please reimburse this company $2.5 million for this discrete singular event, like, makes perfect logical sense. But I don't know what the sort of international regulation mechanism for that transaction. But logically, of course, it sounds great. But I don't know how we could make it happen.
Yeah, I think it, it's a probably a direction. I think, to your point, Kevin, I don't think we've seen the potential of it happening, with some of the events in the past year. But I think I'd rather taking a proactive approach rather than waiting for that event to happen. So you already have, something in place, because, natural disasters do happen. And I think we're waiting for the one that is similar to something that's major, like a hurricane or like a, tornado, whatever it might be that causes serious disruption. That it'll be good to at least have the backing and support. So this moves into another segue into understanding about understanding about the questions and the process you went through. What type of data do you need to continue gathering from customers after I bought a policy and now I understand I've got underwriting and what type of data do I need to keep giving you? And is it automated? Do I have a system in place that does it? Do people come into my environment to collect that data? What's the process to continue getting updated data? Because things change. I deploy a new solution. I might decide to get a new database. I might decide to get a new part of the business or acquire a company. What changes does that impact?
Yeah, so traditionally, and the sort of traditional cyber carriers don't collect any data sort of in the middle of a policy period. It's, they consider a company at the time of initial underwriting and then wait until that policy is up for renewal a year later to, send out another questionnaire and just sort of ask the same questions and ask if anything has changed. This is one area where we're trying to be a little bit different. So once organizations have bought one of our policies, we have an entire security arm of our organization that engages with them in a way that, yes, we're collecting data, and that's helpful for us, of course. But the primary motivation there is to help customers secure themselves better. So it's sort of a included consultation offering where, if you buy our policies, then we have this team of security experts that meet with you, do a deeper dive into your security, make some recommendations. What a lot of that ends up looking like is our security team sort of partnering with the security team at the insured organization and helping them make a case to their own leadership team that it's worth investing in additional resources to implement whatever security controls or processes. So, we do collect some data, at that during as part of those consultations, but the primary purpose is to, help the companies improve their security, which is good for us and good for them.
That leads me to another question. There seems to be a lot of different types. Do you have any type of templates or reports or examples that companies can take a look that would be publicly available, that they could go and say that, okay, I'm going to go down this path. I need to have a good understanding about preparing and getting ready. Is there anything that you have available that would give them examples or templates so they at least know, or can already start going down the path of getting ready?
Yeah, I don't think we have any of that kind of thing publicly available. I think organizations usually work with their brokers to get a sense for what insurance carriers are looking for, and sort of have those conversations with brokers to prepare for, the applications and the questions that may come up. But Kevin, do you know?
Yeah, but I do think I think the one exciting piece on the topic that has changed is normally, and this would be true with most lines of insurance as well, but normally the process only kind of goes one direction, which is the insurer is analyzing information on the front end, and they may ask some questions, some follow-up, try and get more clarity, and then make their decision of, okay, we're willing to insure you at XYZ terms. But now in the cyber market, with the help of security teams, data science teams, it has broadened where now as an underwriter, I can sit there and I can go to insured and say, we were able to identify XYZ security concern or vulnerability and raise that to them. And then they can respond, ideally fix the vulnerability and let us know. And I think that's an evolution in the process that it's a win for everyone, because sure, as an insurer, you're hoping, okay, I'm identifying a risk on the front end and hopefully getting rid of that risk. And ideally that means they might not have a loss associated with that. But that's an added benefit for the insured or prospective insured that didn't used to be there, essentially providing this additional advice versus just providing an analysis and asking questions and then offering what you can offer. But now saying, we see this, we're going to help you manage your security risk on the front end versus just providing the insurance on the back end.
The other thing I folks love to hate on the insurance industry, but it is an efficient sort of market mechanism for making good change. I heard a broker say recently that, if a customer comes to them who already has, is working with a broker for a property policy and comes to them and says, I'm interested in getting a standalone cyber insurance policy as well, before they even, send out applications and start interacting with carriers, apparently brokers are saying to organizations, are you enforcing MFA on your email? And if the answer is no, then, the brokers will say, you're not going to be able to get coverage unless you do this. So, security change is happening, via the insurance market as a lever, which I think is just awesome for the whole world.
And that's good. We go back to the same story of the seatbelt, the car seatbelt, where
exactly
you couldn't get insurance unless your car actually had seatbelts. So same as basically security industry is that you need to practice security, you need to implement it in order to get insurance. So I think that's a positive direction, is the force. One thing I'd love as well is that organizations that implement and do security should get discounts. so get something as a reward. Kevin, I have a question for you, which I'm just interested in learning as well. Is that, since you're an underwriter, how did you become an underwriter? And one thing is, is it something that underwriters should get cybersecurity trained, or is it something that even our audience from cybersecurity professionals should consider becoming underwriters? Is that something that is that a path? Are we starting to see cybersecurity underwriters? Is that something that is becoming a thing?
We might have lost Kevin, but yep. I can say our in general, cyber underwriters are coming from the insurance industry, not the cybersecurity industry. They are generally trained on the job. I think some of them do take courses to sort of further their cybersecurity understanding, potentially through Cybrary, one of the hosts of this podcast. Although I'm not sure, but they're generally insurance industry professionals. But yeah, I think more cyber expertise in that world is always helpful. Kevin and several others on our team have really become experts, and it's great. It really helps them have productive conversations with companies who have applied for insurance. But it's at least half a sort of sales role as well. So yeah, cybersecurity experts who are interested in this market and would like to sort of do a little more salesy stuff. Maybe outside the chaos of the cyber vendor markets. It very much could be an option.
Yeah, I definitely think there's many people in the audience would definitely be interested in. Sometimes, this is a good time for people to consider careers where they've been working from home for a long time, and maybe even doing some courses on Cybrary and other platforms, that it gives them an opportunity to look at other areas. So, and widen their career and get into new things. So Ann and Kevin, it's been a pleasure having you on the show. It's been fantastic. Really, hopefully the audience has got really up to speed and got a good understanding about where the state of cyber insurance is today, and some of the things they can do, in order to prepare. Because I think it's really important that, in this industry, we can't go it alone. We all have to work together, and we all have to make sure that we're resilient as possible. Because that's, ultimately, the more resilient you are to different attacks and different events that happens, whether it being natural disasters, whether it being accidents, or whether it being cyber attacks, we want to make sure that we can continue moving forward. So, Ann and Kevin, it's been a fantastic having you on the show, and I look forward to hopefully having you on again in future when maybe we'll learn more about new types of packages and new how cyber insurance evolves in the future. So for the audience, it's been a pleasure having you. Hopefully you got some educational news today. And definitely, if you're looking, reach out to Resilient and Ann and the team and Kevin if you're looking for cyber insurance and looking for advice and direction. So, Ann, Kevin, it's been a pleasure. Thank you.
Thanks so much, Joe.